Bitcoin and gold are two strategic monetary assets shaping the future financial reset taking place in the global economy. It is for this reason this channel is dedicated to Bitcoin, BTC, technical analysis, gold, XAU, technical analysis, and how institutional capital moves between these two assets. In today's Gold Daily Technical Analysis, we use our BCG Market Structure Simplified dashboard to get a snapshot of the current gold price action. The dashboard looks at three core areas: trend and swing direction, price movement and price zones, and current volatility. Gold structurally remains bullish, with volatility compressing around the $5,000 price level, which continues to hold up well. Here are the price levels influencing gold's market action: $5,700 resistance level, $5,000 equilibrium level, $4,400 support level. If $5,000 support fails, the market could rotate back towards the $4,400 structural support floor. In today's analysis, we cover: where is gold now? Which price level institutions are defending? Which price levels could change the current structure? Welcome back. We are BitcoinCapitalGold. A global financial reset is quietly unfolding, with governments and major institutions positioning for a future where Bitcoin and gold form the foundation of the next monetary system, replacing our broken global fiat system. This channel's only focus is only these two assets, Bitcoin and gold, using structured technical analysis to understand market structure and how capital rotates between these two strategic assets. If you want to stay ahead of this far-reaching monetary shift, this channel is designed to help you understand it early. Let's get into it. The market phase is up. On every high time frame, yearly, monthly, and weekly, the trend and current swing direction remains up. What has changed at the start of this week was the daily swing low 3rd March at 5,005 was broken. Structurally, on a daily time frame, we have a pattern of lower high formed on 10th March 2026 at 5,248 and a Monday's new lower low on 16th March 4,970. Price action is currently testing the Fibonacci support zone, which we will talk about shortly. It's important first to remind ourselves of the context that price is working within. The range of the three bars created on 29th, 30th Jan and 2nd February, which we referred to as the dominant range, remains the controlling factor. It is a dominant range because all subsequent price movement is contained between the upper boundary at the 29th January 2026 all-time high at $5,700 and the fast two-day decline reaching a low of $4,400, which forms the support. Until price action approaches these two data points, any price movement is just noise. Sellers have been unable to push prices much below $5,000, and we are seeing both resistance and support at the equilibrium price of $5,000, indicating institutions may be defending this level. Last week, week 11, saw Friday's close claw back earlier week's gains. It did, however, close above the equilibrium price of $5,000. Last week's range movement almost ended flat. This week, week 12, has dipped its toes under $5,000, and we are yet to see if sellers want to test it lower. For now, the equilibrium $5,000 equilibrium level is holding firm. We are still on Tuesday, 17th March, so the full week's activity is still to unfold. What we do see is on a daily swing basis, the pattern of higher highs and higher lows has been eroded and replaced by lower high and lower low. We are still moving around that $5,000 equilibrium level. From what we can see, there is no seller conviction. The equilibrium level is also supported by the Fibonacci support zone sitting at $4,400 floor. Support at this level confirms that $5,000 can hold. On the upside, the resistance zone sits just above $5,400. This area was tested by the 2nd March high at $5,434, but closed below the Fibonacci resistance zone. To date, it has not been able to reach this height. Volatility. Can volatility provide us with any more clues? On a short-term basis, day 12 and day 13 showed us declining ranges. It's still too early to know the range for this week, week 12. The last 2 weeks and last 2 months are showing declining ranges, indicating compression. Right now, the data suggests the market is not expanding strongly in either direction. Another way to look at volatility is by measuring the close to the open. For gold, the weekly is telling us that the close to open is getting tighter. Week 10 was 197 and Week 11 was 125. If the current week, Week 12, can push higher, then we can see some buying coming in. The last month's close to open showed the first negative close to open in 6 months, although we are only halfway through March 2026. In short, the volatility is painting a continued picture of compression, while gold continues to work out its next move. If the compression ranges continue to be smaller, the compression is getting tighter, leading to an explosive move. The dominant range between $4,400 and $5,700 has contained every move for several weeks, and the market has repeatedly tried to move away from the equilibrium point, but continues to oscillate around the $5,000 price zone. So the market is not yet trending strongly in either direction. Instead, it is building pressure inside a well-defined structure, and eventually that pressure will resolve with a directional move. With the structure and key levels now defined, the market can realistically unfold from here in 3 different ways. Scenario 1. Buyers continue the move. The first scenario is that buyers can gather momentum above the balance point at $5,000 and begin testing the resistance zone at $5,400. If that level begins to break, the next structural objective would be the range high near $5,700. Scenario 2. Range continuation. For now, gold continues to oscillate above and below $5,000 with very low ranges. Scenario 3. Support failure. So far, $5,000 has held firmly, but sellers may test below. In that case, we would expect the price to oscillate between the support near $4,900. If support near $4,900 fails, the market could rotate back towards the lower boundary of the range near $4,400, and a break lower would cause a major structural change. So the market remains balanced for now, but those are the 3 paths that price could realistically take from the current structure. Before we finish, let's simplify everything into the 3 numbers that matter most right now. If you remember only 3 numbers from this entire analysis, remember these: $5,700, the range high; $5,000, the equilibrium point; $4,400, the range floor. Currently, gold has an upside bias. So the structure is actually quite simple. The dominant range is controlling everything between $4,400 and $5,700. The start of this week has broken the daily swing low at $5,005. However, price is not doing much other than going slightly above and below $5,000. The fact is, price can go either way and eventually will move away from the equilibrium point of $5,000. However, the next major test sits above price in the $5,400 Fibonacci zone, and support remains near $5,000, with the ultimate floor still at $4,400. Until price breaks outside this dominant range, the market remains in compression, and the eventual breakout from that compression will likely determine the next major directional move. From a BCG market structure perspective, the key elements remain unchanged. Trend remains up, key price levels are holding, and volatility continues to compress. And that's your market structure simplified view of gold. Every day we publish a market structure simplified briefing on both gold and Bitcoin. Gold and Bitcoin are not competing assets, they are strategic levers responding to different financial conditions. Gold is asserting itself as the defining store of wealth of our era, reaching all-time highs against a backdrop of war, inflation, and institutional demand. Bitcoin is simultaneously rewriting its own narrative, no longer simply a speculative asset, but one that serious portfolio managers are beginning to position alongside gold. Understanding how these 2 assets interact is no longer optional. This channel is built to help you think through that decision with structure and discipline. If you found this video useful, consider liking and subscribing so you don't miss tomorrow's video. What do you think of the levels we gave? Do you agree? Do you have your own levels you're watching? We'd love you to share your thoughts. Comment below so we can all discuss. At the heart of the new global financial economy will be Bitcoin and gold. If you want to be ahead of the curve, follow this channel.